Okay, picture this. An economy running on two engines, massive immigration and unprecedented government spending. Now, I want you to imagine both engines sputtering at exactly the same time. Well, that's the scenario that Nick Hubble, my guest today, warns could trigger the recession everyone expected in 2023, but with an unexpected twist, it might be exactly what we need. Now, the full article is in the description below to our website. You feel free to go and read it. But first, just listen to what Nick has to say. So, you know what's fascinating and actually quite astonishing? While everyone's been celebrating GDP growth, Nick, you've actually spotted something hiding in plain sight. In Australia, a staggering, I didn't know this, by the way, this was news to me this morning, a staggering 82% of new jobs in the past 2 years were in the public sector. Now, that's not growth. To me, that's life support. And now, with immigration becoming politically toxic and a toxic topic to talk about, and government spending hitting the wall, we might be about to find out what the real economy looks like. So, Nick, let's dive into something perhaps a little provocative from your Fat Tail Taily today, and that's the idea that we've been measuring economic health all wrong. You've compared government spending to a parasite that eventually kills its host. Can you just start by unpacking that metaphor and explain why it matters so much right now in today's economy?
Yeah, the parasite metaphor is only true to the extent that I'm trying to point out that government spending is reliant on the wealth created by the private sector. It's reliant on taxes to fund it, whereas the private sector could be just fine without all this government spending that we've been doing. And so the way we measure GDP includes the parasite and the host, right? It includes them both. And so if you get cuts to government spending, overall GDP might look like it's declining, but if the private sector, the part that creates the wealth that the government relies on to fund itself, grows as a result of your cuts, that is a more meaningful way to think about the problem here. I think that the way we use GDP figures and the way we talk about them hides that distinction. And so we've lost the ability to think about, is the private sector growing or shrinking? We just talk about the economy as a whole. And it becomes incredibly difficult because you don't know what share of the private sector is connected to the government in some way. So there's that issue complicating matters. But nevertheless, it's over the last few years, especially in Australia, especially in the US, especially in Italy, government spending has been going really high, going nuts. And that's why we escaped a recession. The problem is governments aren't supposed to spend that much during economic outperformance, just because then the deficits grow during the good times as well, and eventually you get the debt crisis that Italy's in. So we've sort of been misled over the last few years.
That's sort of what happened in the last mining boom. Do you remember, like our colleague Dan Denning? He always used to say we had the greatest mining boom in the history of the world, and we forgot to get rich out of it.
Yeah, well, we funneled the wealth into strange places. I think the Australian dollar sort of absorbed a lot of that wealth. But, Australia is significantly better off than most places around the world. We might not be Norway or wherever it might be that you're comparing us to. But we did do a lot better than most places, largely on the back of that commodity boom.
So bearing that paradox in mind, how should investors think about that when positioning portfolios?
Yeah, my worry right now is that financial markets are pricing in economic growth, a continuation of economic growth. But that economic growth was fueled by immigration being out of hand, especially in places like Australia, the US, the UK. And it was fueled by this vast deficit spending that you would normally only see during a recession, but it occurred during boom times, especially in places like the US. And then you've also got that issue about the amount of people employed in the public sector in Australia. We're 1 in 5, which is massive. It's more than the UK. I just checked a few moments ago, actually. That's because of this massive jobs boom in employment. We've also seen the whole Doge thing play out in the US, where they've exposed absurd inefficiencies and wasteful spending inside the US government, which has goosed GDP figures. And like you said, these two engines of economic growth, the things that have been driving economic growth forward, are turning in a lot of different countries. Trump is cutting immigration significantly, especially illegal immigration. In Australia, we'll probably see immigration cuts under coalition government. The UK is seeing immigration cuts. Lots of European countries have voted for far-right parties that are cutting immigration. Even the European Union is suggesting that we need to cut immigration rates. what does economic growth look like without that vast immigration? There's been an absolute boom in the number of foreign-born workers in places like the UK and the US and Australia, obviously. Without that, what would our economic growth have been over the last few years? Well, we kind of know because we can measure it GDP per capita, right? And Australia is an incredibly severe GDP per capita recession. The UK, I think, posted 0.1% economic growth recently, but on a per capita basis, economic growth fell. So adjusted for the amount of people that governments have been using as a stimulus measure, economic growth has actually been really bad. In other words, I would argue they've been masking really bad economic performance by importing lots of people to do so. And the other half is this fiscal deficit spending that applies more in specific countries like Italy and the US. In Australia, to the extent that it's the employment boom in the public sector. That's also shifting because the debt to GDP ratios are getting quite bad. Interest rates have soared over the last few years. Debt that was borrowed during extremely low interest rates is now being refinanced at much higher interest rates. So there's going to be a crunch in public spending. That's the UK, which is leading the reckoning there with their almost austerity, you could call it, massive cuts, but also in the US with the cuts to the wasteful spending. Without those two things propping up economic growth, we could be in recession very soon.
Next question. So obviously you made the case, right? Immigration is a key driver, one of two key drivers of growth, or growth as is currently being measured. With the political winds shifting against this trend globally, as you said, in the UK and the US and Australia, what sectors do you see as being the most vulnerable to any kind of demographic reversal? Obviously, public sector is probably one of them. Maybe, I don't know.
Yeah, it depends if Trump succeeds in these vast public sector cuts that he's considering. There's been an interesting bit of news over the last few days that the government processes retirements using an old salt mine and paper rather than doing things digitally. So there's like a limit to how many government employees can retire based on how fast they can move the paperwork up and down the mine shaft. So they might run into some issues on trying to get government workers to retire based on this lift in this mine shaft in this, I think it's a salt mine. Anyway, I think the thing to worry about here is the sectors of the economy that are reliant on government spending, with some exceptions. So I'd consider defense to be an exception, for example, but nevertheless, parts of the economy that are very reliant on government spending, and the parts that are very reliant on immigration. Strangely enough, in Australia, we don't immigrate vast amounts of tradies for the construction sector. But I think other parts of the economy are very reliant, healthcare, for example. And that's the big one in Australia and the UK, how a healthcare company is going to cope if the immigration really is cut. And then there's also worries for avoiding the parts of the economies that are reliant on the student flows, right? The foreign student flows, the university sector. I think that's going to be in trouble, and they're lobbying really hard to prevent that as well. There's also some sectors that should benefit.
We'll come to those in a second. I just want to ask you about the Mag 7 stocks. You mentioned those in your piece today as well. Obviously, Trump's and Biden's approaches to government spending are hugely different, right? How do you see those competing philosophies playing out in the markets, particularly for the Mag 7 stocks, which have pretty much dominated for the last God knows how long?
Yeah, about 2.5 years. So the issue with Mag 7 stocks is they seem to earn all of their profits and revenues from each other. They seem to be sort of one big lump that's boomed. And so I think they're pricing in significant earnings growth over the next few years, and a recession would basically undermine that. The real question is whether a recession now would be enough of a pin to pop the bubble, because it's not just the profits they're pricing in, it's also the valuations. So they're trading at very high valuations. It's probably a bubble. We can probably call it a bubble. A recession might be the pin that pops the bubble so that they return to more realistic valuations, which means a significant correction in the stock market.
But you make the point that that's actually going to be quite healthy. That's what.
Well, over time, it creates buying opportunities, and it depends if there's some sort of consequence to the stock market crashing. Effectively, there can always be a financial systemic shock. It's unlikely, given we're talking about the issues being immigration and government spending. It's not a housing bubble or a banking bubble like in 2008, so it should look quite different. But yeah, I think corrections are quite healthy because bubbles need to burst. They can't just keep going on forever. You can't have one sector of the stock market outperforming indefinitely.
So, final question, Nick. You're predicting a recession for the reasons you've stated. What sectors or types of companies are you looking at, just waiting for that to move once that eventuates? Like, what stocks are you looking at for a buying entry point?
Yeah, I think the government side of things is going to be contracting, right? They're going to be cutting back on immigration policy numbers. That's through a policy. They're going to be cutting back on fiscal spending. That's a government policy. It's the other part of the equation that's going to try and adjust for this, which is monetary policy. So interest rates will fall faster than they otherwise might during a recession because the government's cutting back rather than ready with more stimulus spending to come out. And we might even go back to quantitative easing of some sort. Although in the US, they recently ruled this out until interest rates hit 0%. I should say, unless interest rates hit 0% again. But there's all sorts of different other monetary policy options available to central banks. I recently found out, actually, even yesterday, that the Federal Reserve continued buying mortgage-backed securities for many, many, many years after the financial crisis ended. And there's some other repo issues playing around in the markets right now, which suggests that actually monetary policy has been loose during the recent rate hiking period. So my point is there's going to be some shenanigans on the monetary policy side, which is great for gold. It's a devaluation of money. I think possibly the gold bull market that's playing out right now is already reflecting this or giving us away, that as the economy turns down, because instead of GDP being the priority of politicians, immigration and cutting spending is, then everyone's going to look to, well, what's the central bank, the Reserve Bank of Australia, the Fed, the ECB, Bank of England, what are they going to do about this? And we'll be back to sort of the pre-financial crisis era of using monetary policy rather than Kevin Rudd's fiscal policy, 2008 and 2009 type solution, to try and ease the business cycle. And so it's gold stocks, silver to a lesser extent, that benefits disproportionately from when you use debasing your currency and lower interest rates to try and generate some economic growth.
Fascinating. All right, we'll leave it there, Nick. You do, for those interested in reading about some of the opportunities that you're looking in a bit more detail, you do have a report that we prepared. It's called the Australian, I think that's the title, the Australian Mag 7. So it's the idea that the past 10 years has been dominated by 7 key companies in the US. That looks to be changing, and we've actually identified 7 quite compelling stocks in Australia listed on the ASX that could potentially replace those, the leaders, I guess. So anyway, check out the report. We're going to leave it. It's going to either be pinned in the comments below or in the description. I'm not sure which, but the link will be there, and it's a free report that you can check out and get some ideas for your investment portfolio. So I'll leave it there. Thank you, Nick. I'll look forward to speaking to you again next week.